Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. On the gold market, guys, at the first glance the market stands where it was yesterday. No significant action has happened since yesterday. But in the beginning of the update I would like to say a couple of words on the recent Fed statement. Many of the investors thought that the recent statement was rather hawkish and that the Fed still continued to, if we could call it as the promise, to hike rate somewhere in the middle of the 2015, maybe in June, maybe in July, so somewhere in the middle of the year. But I think, guys, that it's not as cloudless as it seems on the first glance. First of all, Fed has included in the comments the phrase about the watching for financial and international development. It suggests watching for geopolicy, geoeconomical shifts in the world, and the Fed has entered this phrase in the statement for the first time since 2013. It means that right now they see that not just the United States economy itself has the impact on its decision to hike rate, but overall world economy situation also. So they see some risks that are coming from the geopolitics that could make an impact on their decision to change the rate. And when you when you get some additional variable that could impact on the result, that's every time increase the risk. That always increase the risk and increase uncertainty. Second, as a result of this statement, the federal fund rate futures that shows the probability of changing the rate depending on the time has dropped for the 20%. So if in the end of the previous year they show the probability of the rate hike in the middle of 2015 is the 70%. Right now they show 51%. As a result of the statement, you could see that the United States Treasury bonds has shown a significant rally in the yield. It means that the yield has dropped, and that usually happens when the perspectives of the rate hiking becomes weaker. That's why my personal opinion is that I'm not sure, and I'm not totally agree that the recent statement was really hawkish. They have not changing the part of the speech concerning that they see the strength in the United States economy and the job market and so on. But since they have added the new comments that increase the uncertainty, then it's difficult to call this statement as the hawkish. That's why I think that it's more if not the dovish, but it's not as hawkish as it was previously. That's why my opinion is that these comments mostly supporting for the gold market in the short-term perspective. Now let's talk about the technical picture. So guys, if you remember, we are mostly watching for possible double repo sell pattern here. And take a look what has happened. A couple of days ago, market has formed this bullish grabber. It's the grabbers that I would prefer to deal with because it stands in the same direction as the previous thrust. So thrust showing an upside action, retracement, the market has formed a grabber that points on upward continuation. This grabber is just stronger because they have the support from the previous momentum. And this stands absolutely in agreement with the possible double repo because we need the second move up and closing above the 3x3 moving average. That's not the 3x3, that's the MACD predictor, but I do not have this indicator on the chart. You probably could do it by yourself and draw this indicator. So this grabber points on taking out of this top, and that's what we would like to get. can see the double ripple sell pattern. Right now, if we'll drop even further, for example on the forward time frame chart, take a look at this small trace in action. That's not the reversal. It's very gradual, very slow and heavy action to the downside. This mostly looks like the retracement. Okay, and that's why the gold still keeps the chances on appearing of the butterfly pattern. It stands in agreement with the grabber. In fact, this pattern and the grabber have the same invalidation point with this low. So if market will drop below this area, below this level, it will erase as the butterfly as the grabber, because in fact this is the same pattern. The butterfly is just the part of the grabber. This action to the upside is grabber itself. Okay, and this action, as I said, looks more as a retracement. It's not a reversal. It has no impulse features, no thrusting action here, just gradual retracement right back down. That's why I think the chances on appearing of the butterfly are still valid, and as soon as they will appear, that will be the major part of the double ripple pattern, because we need to close above the 3x3, and if market will form this butterfly, we could try to anticipate the double ripple by taking the position based on the butterfly, because it will provide a less risk for taking the position, and it will provide the better entry point. That's why in the nearest future we mostly will keep an eye on this butterfly and the possible appearing of the Dinapoli pattern on the daily chart.